Hello, I am Rich Posson with a cyclical outlook on the Dow Jones Industrial Stock Index. This is a monthly bar chart, and I've labeled the 2009 low as a 9-year cycle. It was also cycles as large as 72 years, which means it was the most important low since the 1930s when there was a 216-year cycle bottom forged. Now, the 9-year cycle breaks down into a series of 3-year cycles, and tracing it out as a cyclical bottom. That bottom was placed in 2011, and I think if you check with the QE and the Fed results and the fluctuation of the economy, you'll find it's understandable why it bottomed then. Then we have a running correction bottom, really didn't work all that well, sign of a strong market, came into 2013. Then we have a bottom that's a little more normal in terms of cycles, although it was way too fast in my opinion, not a good moment for the U.S. free market system. A little bit of a blotch on our record, way too fast for a decline, didn't necessarily make a lot of sense. Nevertheless, it occurred, and I believe a 3-year cycle bottom was either forged in August or in late September to early October, depending upon which index you are following. Now, the 3-year cycle is up into 2017, so long as a 3-year cycle top was placed earlier this year. And the 9-year cycle is up into 2017 and may extend with the use of the next 3-year cycle, meaning it will bias it towards the bullish side and thereby extend to the year 2019, which is probably the latest for this particular 9-year cycle bull market. Now, the 9-year cycle relates to the economy growing for about 7 to 12 years and then a recession, a contraction for about 1 to 3 years. And of course, with the strong correlation of the stock market, this gives us a bull market for about those same years and a bear market for about those same years. It seems too soon to have a bear market at this time, and therefore too soon to also have a recession. And I just don't quite find the economic indicators holding up to support the bears. So the best forecast is bullish into 2017. I'd also like to point out in the Dow Jones transports, I do not find the correct number of 3-year cycles to meet a minimum 9-year cycle top, whereas I can in the Dow and a few other indexes. With the Dow Jones transports not having that minimum, I think it's a very high probability there's more to come for the bulls in future years. Now, if we break the 3-year cycle down into the next important cycle, which is the most important cycle during the course of a year, I happen to call it the level 1, and we can see we can trace out a level 1 cycle here, and then it drops in a level 1 cycle here either by the week of October 2nd, or it may have gone back to this low at August 28th, and the trend then is up, and likely up to late November to late December. In addition, a lesser important cycle occurred week of September 18th with level 2 cycle. The market moved above it, pulled back to test the breakout, and has since rallied. I think this market could surge to a record high, more so for the S&P 500 and a few other stronger indices than, say, the Dow, but I think there is that potential. If we use the critical point method, running from this low through the level 2 high, we find out there's potential for 18,101 to 18,778 for the Dow Jones Industrial Average. Thank you.